First of all, welcome to ET Markets.
Thank you.
Thank you for taking your time out. So we'll start by talking about your book. So in the book of wealth, which you've written, you talk about how emotion is the potion for investors. Now, this is clearly visible at this stage when, in the election season, herd mentality is very common. So how should one keep calm when the market is behaving insanely on both sides?
That's a very, very important question because, as I mentioned, the herd is very prevalent in almost every circumstance in life, whether it be politics, the market, in shopping, whatever. And the way to avoid being caught up with the herd is by being very strong and sitting back and say, wait a minute, do I want to do this? Do I want to move in this direction? And when it comes to investing, you always have to keep in mind that the best way to get the best value is to do what other people are not doing. So, there's an old saying, the best time to buy is when others are very selling at a very unhappy period. And the best time to sell is when everyone is greedily buying. So you've got to keep those principles in mind. Otherwise, you'll get caught up with the herd.
Right. In your book, you've also mentioned about how Rakesh Jhunjhunwala could not enjoy his wealth because of health issues. Would you agree that traders die early and investors, especially like you, live a very long life and a happy life?
Well, it depends on the trade. Some traders enjoy the trading and they get enjoyment out of it, but they have to balance their trading with life, with health, and it's very important. So unfortunately, many traders do it 24/7. In other words, they don't take any time for anything else. And that's when they get ill and their health declines.
And in India, this is becoming a typical problem because of the surge in derivative trading among retail investors in particular. How do you see this trend and the impact on the health?
Yeah, it can be very dangerous if people get involved with trading on a day-by-day basis. Particularly for individuals, that I point out in my book, it's very important to be a longer-term investor, let's say. In other words, take a longer-term view, buy a very good company, and stay with it. As long as the company remains profitable and is growing, then you stay with that. Don't be swayed by market's ups and downs, rumors, what your friends and neighbors are doing. You've got to be independent is probably the best way to put it.
Mark, in your book, you also write about the importance of frugality in your book. Now, in a growing country like India, where the middle class has so many aspirations and, we're competing against each other and, we're always trying to outbeat, the Jonasses, as you say, in America. So don't you think it is tougher for the Gen Z to be frugal?
It is very tough because you've got a bombardment of the hype machine. I call it the hype machine, where you've got your cell phone all the time, looking at what people are buying, what is selling. You're following certain people and you see what they're buying and selling, and you want to do the same. So you've got to be resistant to this kind of enticement. Very, very important, and very difficult, I might add. But it's critical if you want to become wealthy, because if you're spending all your money on frivolous things that really have no long-term value, then you're not going to become wealthy.
Right. So Mark, now talking about the elections, so how has your calculations for India changed, given the fact that PM Modi is coming back most likely with a thinner majority?
Yeah, it is unfortunate. And of course, we have to reevaluate the direction of the country, because my general impression has been that the Congress party has been the party of bureaucracy and of a slower decision-making. Now, that may be wrong. I may be wrong in that assessment. Hopefully, the Congress party has learned a lot from what Modi has been doing, and maybe will continue the policies that Modi has embraced. But that gives me some concern if Modi's reforms will be hindered by the fact that they have less a majority in Congress, and of course, they have the Congress party against them. So it is a concern. And by the way, that pessimism is reflected in the market. I think a lot of other investors feel that way as well. But from a longer term point of view, India is still an incredible place. And in fact, it might be a good time to be looking at the market with this downturn to find some investment bargains.
Do you think the market bottomed out yesterday?
Yes, it looks like it. It may have bottomed up, but I think you've got to be cautious about that. It remains to be seen how the political situation turns out and what kinds of policies will be followed by the new conglomerate of powers that take place in Congress.
Prime Minister Narendra Modi had owned the success of PSUs like no other Prime Minister has ever did. Now, do you think PSUs would be the worst hit? We've already seen some of the correction playing out yesterday as well as today.
Yes, I think that they will be hit. And not only those, but others will be hit as well as a result of the change in policies. You've seen some of the big infrastructure companies come down pretty dramatically because there's a fear that maybe the infrastructure will be slowing down. The construction of roads, bridges, etc. will slow down. So that's unfortunate, but it remains to be seen. I think we've got to wait to see just exactly what the Congress party, along with other parties, decide to do and how they decide to go forward.
Which other sectors besides PSUs and some of the capex linked sectors that you spoke about do you think are going to be the most affected?
Well, I think when you look at the overall situation of the economy in India, the sectors that are going to be doing well, in my view, will be the software and technology sectors generally. Companies making computer hardware, companies going into the semiconductor area, companies doing software. Those companies will not be affected as much. Maybe on the consumer side, you may see some effect, but even there, the economy is growing so fast, even with all of this political upset, those companies will do fairly well.
A lot of trade we are seeing in defensive stocks like FMCG, for example. Given the fact that the new government is likely to be pro-welfare than pro-reform. So how do you see this trade playing out?
That's a big question, Mark, because if you're not pro-reform, then you're really going backwards. You're not progressing. So it's very, very important for the Congress party to embrace reform and change, but that remains to be seen. I think they may have learned some lessons as a result of their failures in the past politically, and maybe they will change.
Do you fear that FIIs are going to derate India in the near term at least?
I don't think so. I think FIIs realize that India is the future. They've already seen that China has problems, and they want to diversify away from China. Some of these FIIs have been badly burned in China and don't even want to go back to China. That's probably a mistake because China is still a viable market. But nevertheless, India is going to benefit from the desire of FIIs to diversify, and that's very important.
But at the same time, we have also seen a reversal of this buy India and sell China policy in the last maybe 1.5 months.
I think it's a very temporary phenomenon. Maybe some people have talked about that, but the reality is that when companies make decisions to diversify, these decisions are not made easily. In other words, they're thinking of a longer term. So companies like Apple, like Microsoft, big companies like that, make long-term decisions. And if they made a decision to do something in India, they will proceed with that decision.
So as things stand now, Prime Minister Narendra Modi is going to form the next NDA government, and there will be a Modi 3.0. So what is the kind of changes in policies that you are anticipating at this stage? I understand it is a little early to talk about it, but given the fact that we already have a manifesto pushed out by the BJP government, by the BJP party before the elections, so we can probably get some kind of, if you can throw some light on it, what are the kind of expectations?
Well, my expectation is that the bureaucracy involved in accepting investments into India will become more streamlined. Up to now, there's a great deal of bureaucracy necessary when you want to come into India to invest. And I think that has got to be simplified and made easier. If that is carried out, then there'll be a tremendous flow into India by foreign investors.
Earlier, you just spoke about that there may be some buy the dip opportunity in some of the stocks. Can you give us some ideas of where do you see value emerging after the correction?
I think believe it or not, some of the construction companies, construction materials, that sort of thing I think will recover and do well going forward, because India needs infrastructure, and they definitely, regardless of what party is in power, they will have to move forward on that.
So given the fractured mandate for BJP, do you think you had earlier said about how Sensex will hit 1 lakh mark in the next 5 years? So as things stand now, do you still think that Sensex will hit 1 lakh in the next 5 years? Does that still stand?
Oh, definitely. We're still on that upward trajectory. There will always be corrections, but we're still in that direction. We will hit that. Maybe
So
even before 5 years is over.
Even before 5 years. Right. So typically, Sensex and Nifty have a tendency to double every 5 years.
Yes, and India may be the exception in terms of moving faster.
Right. Just to sum it up, what you're trying to say is that the market, there may be some short-term gains, but in the long term, the bull run in India is intact, and this is not a pause. This is just a pause in the bull run, but this is not the end to the bull run. Is that what you're trying to say?
Exactly. We're certainly not at the end of the bull run. See, generally speaking, you can say that if a country is growing at 7%, like India is now growing, the market and earnings of companies, of good companies, will go up double that, 14, 15%. So you can expect the market index to be rising at that pace over the next 10 years.
Thanks a lot, Mark. Thanks for your time.
Thank you. Thank you very much.